What's happening, guys? I hope everybody had a fantastic weekend. This is the first video for March. I hope that you ended February well. I hope that you started March off even better. Now, uh, market shifting a little bit, and my focus is going to change towards earnings plays and big gap downs, big gap ups, and sort of just joining that trend. There's a small window of opportunity like this where all the big news comes out. The earnings comes out, the big PRs, whatever they're going to talk about on their earnings call. And you've got this window where, in my opinion, there's always going to be market risk. But you've got this window where maybe you can play a little bit larger, take advantage of those 2, 3 to 5 days surrounding earnings where everybody's excited about it. And AI is a great example of earnings report comes out, everybody's obviously short biased because it wasn't anything really too exciting. However, guess what? We're going higher. It's running up higher. So just be aware of, it doesn't matter what you think. It doesn't matter what the report says. All that matters right now, short term, is what the tape suggests, what the price action suggests, and what it's doing. A lot of times people come with too much of a bias and try to force that. And instead, they end up on the wrong side when they probably could have avoided that altogether. So before we get started, as always, I like to give away stuff. So Candy Thomas and Anthony Carr, you guys had left comments last week, and so you've got the t-shirts for this week. Just email me, webmaster@investorsunderground.com, and we'll ship those right out to you. I appreciate everybody that does take the time to leave a key takeaway. I try to pick different people every single time, so if I pick you twice, 3 times, my apologies, but for the most part, I think I've done pretty good. And other than that, I think we've got a decent bit to talk about, but it's going to go pretty quick. Last week, I actually took off. I did not trade Monday, Tuesday. I traded a little bit on Wednesday, but I had gone out to St. Thomas, and it was a great time, great weather. Couldn't have asked for better mornings and then better temperature, 85 every single day. So that was awesome. The end of this week, one of my trader buddies is getting married, so I'll be out in Vail. So that should be a lot of fun as well. One of the things about this market in particular is that I'm noticing a lot of multi-day runs. So, normally maybe you see a pop and a drop, and, that's kind of it. But what we've been seeing a lot lately is the pop, consolidate, and then multi-day run, which is great because that means a lot of people, a lot of retail, a lot of headline chasers, a lot of PR chasers, things like that are making money for now, right? And whether or not they sell and whether or not they hold it for the next month or two and end up losing over time instead of intraday, that remains to be seen. But point is that things are ramping up, heavy volume. If it holds dips over the next day or two, watch out. It's taking a leg higher. But as always, you should be aware of which ones can raise, which ones need capital yesterday. And of course, you'll probably see some of those pipe down in the intraday or after hours or even pre-market sometimes when they raise the money. But that said, there's been continuous momentum in small caps. The good part about this, one of the most common questions I would say is like, how do you know which one to focus on? And it's a general gauge of what's going on pre-market that you have to kind of take in. And is there one or two big runners? And if so, then they're probably going to be very crowded. Everybody's going to be focused on those names. Everybody's going to be shorting those names. And if they hold up, it's going to be a crowded swipe, possible circuits, and all the stuff that we really don't like in small caps because it makes it difficult. It's hard to have heavy conviction. You can be super convicted on a particular trade, but if it's crowded and you're wrong, that's costly because it happens fast. And a lot of times you don't even have a chance to get out before circuit halts, right? So for me personally, whatever the flavor of the day is, I want to be hands off. If I trade it on the front side, it's small, but I want to be hands off until I see a lot of exchanges, hands off, as far as being aggressive and high conviction, until after the open. And I would even argue that I would not have high conviction at all on small caps. So I'm trading probably 25% of the size that I typically would trade for many reasons. One, reduces headaches and stress. Number two, it lets you let the trade work. And number three, the emotional impact. You're not focused on every single uptick, downtick, swipe. You're letting it work. You're letting it do the work for you rather than you stressing over a couple upticks here and there throughout the day. So that is one big thing where maybe normally on a particular trade, CYTO, for example, I had posted that trade. That was the trade of the day for me on Friday. Trade added up. It was a big trade, but maybe it wasn't as large size-wise as I typically would trade. Now, would I have been as patient? Would I have held as long? And the answer is probably no. And so the thing about that is to kind of consider that. Are you sizing up too much and then getting kind of worked out in this action? You missed the big trade. Had you been smaller size and you made the $2 per share, which one would you have made more on? Right? And at the same time, which one involves less risk and more upside? So that's really where my focus has been on small caps. And as you guys know, I really want to focus on liquidity. I don't like the super, super small cap, the super, super low flow type names. I will trade them, but to a certain degree. I will not go aggressive size like years past. It's just not worth it. And at some point, one will catch up. And we all know that. And you know that names are super, super trappy right now. One of the most common things that I talked about last week on broadcast in the morning was you can't act surprised when something swipes back up randomly. You know that that's the type of market that we're in. So if you act surprised, then you're not prepared, right? So you need to make sure that you build in that swipe risk, that you are prepared, that there's a good chance that you could be potentially wrong, and you don't need to anticipate with size. Let all that crowd come out and then start to put on your size after it proves. After you are trying to add size, you miss the fill. You miss the fill. You miss the fill, right? That means you're on the right side. Think about it. If you're on the short side and you're trying to cover and you miss the cover, you try a little higher, you miss the cover. You try a little higher, you miss the cover. What's going to happen? At some point, everybody's going to say, well, heck, I can't get a fill. And what are they going to do? They're all going to go to the offer. And it's going to swipe, and it's too late. So think about that before you make trades. Think about that with small cap land. And the topic that I wanted to talk about tonight and how I'm preparing for the week ahead is stuff like Rivian, RIVN, into close on Friday. You've got AI. You've got NEO bouncing. You've got CVNA bouncing. You've got all these big names with huge range right now. Market just squeezed out like crazy on Friday. Now, the thing about that is that bullish, or was that just a short covering rally, right? And are we going to gap down 300, 500 points on Monday? We just don't know. So I don't try to figure that out. I know a lot of people try to figure out the market. I know a lot of people have a heavy bias one way or the other. But in my opinion, nothing ever happens on your timetable. So just, who cares? Trade. Be a trader. Come prepared, ready with names that have range, and focus on those. If you try to get them all, you're going to miss them all. Focus on what you do best. And so today's scan, I posted without really commentary a bunch of names that I have of interest. And those are kind of range plays that I would basically set price alerts and watch and wait for the sector to potentially either heat up or cool off. And heat up, I mean, maybe like a parabolic move, blows off, starts to fade off, right? I want to take advantage of that action. Just like Rivian, when it got the headline, a lot of people came in. It ramped up like 30 cents, 40 cents. And it just felt like a lot of people either covered into that, got long on the headline, and then it just kind of shifted. It stayed heavy. So I felt like all of that might end up coming back. And it did. And that's the type of trades where I can size in, trade heavy, and have heavy and high conviction compared to a small cap where, you're one swipe away, right? And for me, that's not what I'm looking for at this stage anyway. I'm sure some of you guys love to get after it, but that's just not for me. And I'm all about trying to simplify my trading and trying to have less risk, less headaches, less emotions, and less stress. So if that sounds good to you, then that's really what I'm focused on, and that's what I kind of put on radar each and every single day. Um, AI and Kala, AI and Kala, Kala. Those are two great examples. So AI, you saw me tweet it. If you're not in the room, you saw me in the room. Warn against the short. So I started in real small, and I wanted to get a feel for it. I was looking pre-market broadcast. My goal was to see 26 basically swipe and kind of confirm that was it, right? That was the prior level where there was a 26 line and a 28 line. And so my thought was they might trigger all the stops at 26, clear it out, and then slam it back down. And that's exactly what happened. I was prepared for that. I took it, but when it flushed under 25, it went 25 to like 24.90s, 24.80s, something like that. Came right back up. Back under 25, came right back up. Back under 25, right back up. You have to notice that. Most people will have their goggles on and saying, all right, I just crushed it, 26 to 25. It's going to go to 20. I can't wait. And, you avoid everything else. But you have to see that each time it was flushing, it's a dip and rip, right? And every single time we see one of those on an active name, I always mention it in the room. Cautious, dip and rip. Make sure that you've either adjusted, make sure that you've covered, make sure that you're out. Or one thing that I'm still working on is getting long on those situations. Sometimes it's a little bit more difficult, but basically what I wanted to see is another stuff at 25s to see it fall through. And it didn't. So as it gets back up and reclaims 26, all the alarms should go off that everybody is trapped on the short side at this point. And now what happens is every time it flushes down, nobody wants to miss the next $1.50 flush like earlier. So everybody just hammers away. Then it comes back up. Hammers away, comes back up, right? And so at some point, if it stops doing that and those dips get smaller and smaller, as it slowly grinds, shorts stay in. It is the worst thing to be short because as a short seller, if you start early, you're looking for maybe a parabolic move to scale into or a breakdown. But if it just does enough to slowly grind, you look back and you're like, oh man, it just moved $2.50 and I didn't even realize it, right? It just kind of slowly grinds and it keeps you in that trade and you have more risk on than you thought. So same deal with Kala. Kala, I started in on Friday, late day, and I was waiting to see 1550s peak out, right? So I think I put it on, I think it was 16, low 16s, I don't remember exactly. But maybe it was a little bit under that. But basically, I was looking for 1550s to flush and peak out, and then come back, stuff against that level, and fade off. But each time it flushed, it soaked. Flush, soak. And each time it was holding a higher base. So each time it does the flush, people are afraid to miss the pullback. They slam into it. And if it holds, if there's no more sellers, then it's going to go grind higher until there's some sort of parabolic move that blows them out, or until there's some sort of exhaustion move. So that's the same situation as AI. So I would hope that you guys can go back and check those. If you guys are in the room, just go back and check the chat logs and draw those lines, draw those levels, and read the commentary that went along with those two trades to this is all about you being able to identify it for the next time. It's not I told you so or any of that. These Sunday scans are never about that. It's all about how can you, as a trader, identify this on your own and be aware of it so that you aren't that trader that's add, and then you blow out just like everybody else. And, hopefully in a situation like that, I'm prepared, I'm ready. I don't have a position. I'm able to react to that situation. So that was the big topic that I want to talk about. And like I said, the shift in my types of trades for this week ahead and how I personally would prepare. And that's really just earnings season. You can take advantage of this kind of action. You can get away with maybe more size. You can get away with more aggressive positioning if you know what you're doing. If you don't, then just trade as usual, right? And just like I've said the last couple of scans, if you're going backwards right now, there's a problem. But you should either be grinding higher or at least just flat. Like don't dig yourself a hole. If you're not trading well right now with all these opportunities, then just hit the pause button. I've said that for the last couple of weeks. You should not be, going in this little rabbit hole of downside at all. There's a lot of great opportunity. But if it just doesn't, kind of fit with your personality, then don't chase that. Don't chase bad trades. Don't chase throw good money after bad. And just take a pause and wait for your market to return. And I told you guys, the end of last year into January, I was very hands off, very small trading, just kind of waiting, grinding along for my market to come back. And that was February for me. That was a breakout month. Obviously, it's the second month of the year. But, out of the last 6 months, that was my biggest and best month. And that's just because hands off, getting prepared, waiting for the action to come to me rather than pushing buttons and forcing it. So last but not least, I've got a couple questions that were sent in when I had asked, and I'll fly through those, then we'll get right into the Sunday video. How do you identify short traps or over and understaying in your position? AM got me win under 5 and rebound. How do you identify short tramps? It says, but I think traps. Basically, kind of how do you identify when things are trapping is my interpretation of that tweet. And I would say go back to last video on AMAM. We talked about that exact thing. Draw those channels. Talked about it on AI. Draw that channel, 26 level, and you saw 25 soaking. Look for those wicks, right? When it should have flushed and it gets caught. Should have flushed, gets caught. When it does that move, that short's hammering it, and then it swipes back up. There's no sellers. So recognize it should have died there. If you ever find yourself looking at something and say, that should have died, that is something that should be triggering in your head. Am I over positioned? Do I have too much size? Is it doing what I expected? Should I size down? Should I scale up? It should trigger all those questions. Reevaluate your position when that happens. And a lot of times you'll realize that maybe you're in a little bit too much. You're anticipating something to happen, and it just tried to happen, but it didn't. So keep that in mind. But AM, draw those levels, and that was 580, I think. 580 was that key level. So, under it, great, comes back, starts to base 580s and continues to go. And I think the other one was 630s. Remember those, draw those charts. On DAS, you're able to actually save your chart and save your lines. So you don't even have to remember it. They're there, if you save your desktop each day. And then other than that, set price alerts. In IU, we have price alerts. You can even put notes. So, for example, AMAM, I would put a note, say 580s, key line, key channel line, 620s, key channel line, and you can write those notes and it'll remind you why you want it to be alerted at that price. Sometimes you just need that reminder, and it's you want to you're trying to trade what you want to trade, what you think you should be trading, and rather than just seeing what it's actually doing. Next one, exit strategy when a trade works out. What you see on a chart or tape that makes you think the trade is finished, and also related how not to get shaken out before the full move happens. You're always going to get shaken out of some stuff, right? And I don't think it's good practice to try to hold full size the entire trade. There's an argument on both sides, and some people that have absolutely made it, they don't really care. It's either going to work as they expect or they're going to stop out as planned. But when I do these videos, I feel like I'm talking to maybe an aspiring trader. I'm talking to somebody that's kind of up and coming, and it can be extremely frustrating to try to hold for the entire move every single time, only to see it grind back. We're in a market where there's a lot of times where small caps come in, fade, rally back, right? And then the next day they gap down. That can be extremely frustrating 3, 4, 5 days in a row when you're up huge at 10, 11 a.m. and only to turn it into a flat trade or a loss at the end of the day. So for that kind of situation, if it stops making lows at 10, 11 a.m., I typically start to size down. It should be staying heavy. It should be kind of retest, retest, retest. The other thing too is if it does not retest, if it was easy, right? Again, trading is not easy. However, if it was easy, meaning you got short and it just went straight down, if it starts to flatline, There is no reason to cover yet until there is a reason to cover. So I'd rather be a little bit proactive in covering, because as soon as there's a reason to cover, there's been no reason. Nobody's covered. So as soon as there is a reason, a lot of times you'll see it swipe up. You'll see the cover come. Right? So I'd rather just take the risk of maybe not making as much, such as CYTO. If you saw that trade on Friday, straight down. Stuff, unwind, let it work all day, started to flatline a little bit, and I knew if it swiped up 30, 40 cents, I'd probably be upset. So I sized down. There was actually a little swipe, and then it slammed back down, which kind of proves again that it's going lower. And then I let the rest work, and I covered about a half, 75%, and then the rest into the close. So that's sort of a situation, kind of how I would trade this particular market or this situation that you asked about. And then obviously later on in the day, OBSV was another one where it was fading all day, easy short from the parabolic. Again, trading's not easy, but this situation, easy in the sense that it gave no headaches. It swiped up, straight down, right? As it starts to bounce, staying heavy, but I noticed that it kept on holding a particular level. If it doesn't break that level, it's going to go the other way. So you saw me size down and at 18 cents. Then it went to 19, 20, 22, 25, 27, 28 before it came right back down. So basically all it did is run the stops on everybody that was patient, that didn't size out, ran it, made them cover, and then use that as an exit. So I always want to stay focused on, basically locking in along the way. I don't want to be a hero and try to get the entire thing. It's frustrating more often than not. And so I never have a problem when I lock them in. How do you differentiate between a fail and a bear trap? See AI on Friday. So I would take that in real time. Go through the chat commentary and see, going from a short bias to, hey, that should have died. That should have faded. That should have stayed heavy there. Note the wicks that we talk about literally every single Sunday video. On the daily chart, I talk about, the wick that comes back and gets saved. Wick comes back and gets saved. That's what you want to be aware of. And if it should have died, again, it should register something in your brain that says, hey, I need to reevaluate my bias here. And most of the time that people get smoked on these things is because they're trying to force their thesis. Rather than listening to what it's telling you, you've got this one track mind going where it's a short, the earnings report was, nothing, it has to fade, and it's telling you no. It's telling you no, that's not the case. It's going this way for now. Now, could it gap up on Monday and then just fade the rest of the week? For sure. Just like DraftKings, just like Twilio, TWLO on their earnings, right? Had a big blowout and then just down straight. So just be aware of that. And then last but not least, when the short looks obvious, you still get in small, cautious, or do you wait for the crowd to get pushed out and then enter at full size? I always want to be competing on the offers on the short side. I don't want to be the only shorter, right? Because if you're the only shorter, if you're the only offer, only seller, where's it going to go? You don't know. So I'd rather be competing on offers. So yes, I will trade the front side, but again, it's a very small 5 to 10, and if it's a very, very high conviction, up to 20%. And high conviction front side if it has heavy liquidity. If not, then rarely ever would I be 5 to 10% over that. But that's it. Just wait for you to be proven right. Every morning, I want to be proven right. If I'm being proven right, that means I have a good read on the situation. If I'm not, and it's not doing what I expected, hands off, size out. It's fine to keep a couple, but hands off. Stop forcing your thesis when it doesn't agree with you. And last but not least, Avidity Fitness, I haven't mentioned in a while. You guys got to join up. You guys got to come. Anybody that's in IU is welcome to join. Anybody at Centerpoint is welcome to join. So email me or PM me in the room. I will send you the details. But if you're not part of Centerpoint, if you're not part of my room, then you can definitely join as well. And then Zach can help you out with that. But that keeps me accountable. And I wouldn't. I'd find another excuse to not do it. So it will help with your trading. It's going to help you keep your mind right, keep your trading right, and it helps me just stay accountable, like I said. So anyway, that is it, and let's get into the week ahead. All right, guys. So for the second part of Scan, as always, I am not a financial advisor. These are not buy or sell recommendations, and this is for educational and informational purposes only. If you're looking to be told what to buy or sell, you are in the wrong spot. That's not what we do here. My goal is to show you what I look for, what I think is a good high reward to risk type of setup, what makes a good trade, and then educate you on how to be able to find that out on your own. So if that's not good for you, shut the video off. If it's good for you, let's continue. And by the way, I'm glad that a lot of you guys took advantage of our partnership with Centerpoint. I know a lot of you guys took advantage of it, and there is still time to do that. But I was really happy to see the response because it really was and is a no strings attached, one of actually the best deal that they've ever done. So I'm glad that a lot of you guys were able to take advantage of that. First and foremost, on AI. AI is going to be a watch. Who knows? Are we going to gap up and we're going to go 30-32 blowout and then we're going to fade back? Or are we going to have a weak open? It's going to rally back red to green. Or are we just going to gap up a little bit and then slowly fade off because they just want to blow out the options on, last week? I don't know. But those are the three scenarios that I would be prepared for and open to. I would love to see a 30-32, parabolic type move, fade off. But at the same time, look at DraftKings, look at Twilio, like we're talking about, TWLO. And those ones gapped up, they ramped up, and then they just never looked back and they went straight down until I think Friday, right, when the market came up. So again, was SPY up because it's bullish and everybody's pulled up? Or is it because it was a short covering rally and then we gapped down, right? So there's a lot of things that are, there's variables that are going to make this trade work or not. And so if you come in and think that something has to happen, then I think that you'll end up, kind of being on the wrong side of the trade. For me, let's see what happens. If it gaps up and it has a parabolic move, I personally can react to that. If you're good at parabolic and reactive trades, then great, there's a trade for you. If you know that you are not good at that, then it's obviously an avoid until things settle down. Sure, you won't have as good of an average, but you also didn't take on the risk. So we'll see what happens with that one. SI was fantastic. This is kind of like a mean reversion sort of trade where, just absolutely got demolished. And my belief was on Thursday that probably somebody was forced to exit out of their position, probably margined up and was not expecting another 40, 50, 60, whatever it was down. I think it was 60% or more, maybe more. And then it was down again on Friday morning. Then it rallied, and I just waited for it to soak at those key levels that I gave. The trade setup worked perfect, and it was $1 per share. I had talked about the flush, 5 reclaim, 520s, 530s being sort of that key level. Then once 540s, I felt a little bit comfortable maybe adding on a little bit more. But until 550 ramped, sat back, firmed up, I felt like that was where the trigger was going to get turned on for that red to green move. And I made it to about 590s or 6s. It did go to 630s, maybe a little higher. Yeah, 630s. But, like I said, like I wrote on the scan, I can be mad that I sold it 590s to 6 and I missed out on that other 20 cents. But realistically, I probably would have sold at the same spot or lower because I would have been still holding 620, waiting for 650 or 7, and then it fades back down to 590, 580s, and I just blow out the rest. So, I never get on myself after selling maybe a little bit too early. But fantastic setup. Look for that kind of situation. That was such a clean move, such a clean setup in the sense that it ramped up and it hit a wall, faded off again, ramped up, hit that same wall, started to base at what was the prior ceiling. Comes back, bases, starts to firm up, nice clean move. Once it got over VWAP, you can risk towards VWAP, look for the red to green, 550 being sort of that $1.50 psychological trigger, and away it went. So that was really, really nice. TRKA, I'd be looking for this one. Ideally, 51 cracks at some point, 50 cents, really the psychological level there. This one's been a great trade. Let it rip. Let it do its thing. If you chase it down into weakness, you're going to get, trampled. But let it do its thing. Let it rip. It's been a great trader. After ramp fades off. But they keep on holding that 51 line every single day, 2 days in a row. And, I've sized up and I've risked sort of my unrealized gain so that if and when it does crack, I know it's going to go 45 extremely fast, probably stay heavy and flush out to 38 to 40, right? And then if that happens, it'll continue to fade off over the next couple of days. I probably wouldn't have a position at that point. But, I've been risking, sizing up into each fail so that if and when it does crack that 50, I mean, that's an instant dime when and if it does happen. When I say instant, I don't mean it's just going to go 50 to 40 cents, but probably 50 to 48, get heavy, 45, and then taper off down towards 40. So that's what I want to be prepared for. But again, you gotta be patient with your entries. It's very easy to get chopped up on this stuff if you try to force a trade. So really great trade of the last 2 days. But again, be mindful that 50, 51 has been somebody absorbing. And if that continues to absorb, then yeah, it can break out. So I'm not here all bearish on it. I know my levels, and I'm going to wait for that to prove. And if it does, then I'll be patient. Rivian, ideally, same. This is what I was talking about. This type of trade in this market. We've got Rivian, we've got Neo, we've got Laser. Laser's been on a tear lately. All these things, stay familiar with them because they are going to make great trades. And again, if you click through the blog post, you'll see the other ones that I'm watching for that. But same situation. Rivian, I'm looking to react to a headline like Friday, be able to fade that back down. Be aware that VWAP may be, a level that's going to soak. And as you can see here, it soaked right into that VWAP level. So basically, everybody that covered into the headline, maybe repositioned. Everybody that bought into the headline probably bailed, forced it back down to VWAP, and then it went right back to where it was prior. That's all. I'm just looking to take advantage of those situations. And because of that, you can actually take a more aggressive, because of the liquidity, you can take an aggressive position. Next up is the failed follow-through section. As you guys know, I look for higher, the better, and then failed follow-through setup. You guys should know what a failed follow-through setup looks like by now. You actually have one over here on this OBSV as well. But I'm looking for some sort of base to form and basically squeeze out, a common area, common top, common base. And when it breaks under that key level of support, look for it to fail to follow through. OBSV, perfect example. We already talked about this earlier. Understanding that, maybe it should have broken down throughout the mid-afternoon here. And if you draw a line, you can see, it pretty much put it in a base, flushed out, came back, flushed out, came back. And after that second time, that trigger went off in my head and said, hey, you know what? I have way too much. And if this does not continue to go down, then I'm going to get back. I had a great average, 22 cents or so. If I don't size out, then I'm going to have an issue. So I covered a third. It started to firm up, covered a little bit more. And I was thankful that I did that. Goes right up to the VWAP, retest, same situation as down here, where it was flush, came back, tested VWAP. Should have stayed heavy at 22. That was the next key level. It didn't. It firmed up, just like AI at 26, just like Kala example. So again, higher the better here. 25 was sort of a big level late day. So I keep that in my head. When I see it again, if it goes up to 25, I'm going to remember that there was a lot of action there. And to me, that gives me a little bit of edge. Boyle, I'm going to be watching. Boyle is, nothing I would jump in front of, but Cold's been completely unwinding since that day. It finally happened. Just an incredible. I always screw these ETFs up. I watch them. I'm waiting for it, and unfortunately, I this would have been fantastic. But that said, unwind, 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 unwind. The first day that this thing pops up, even $3 to $5, this Boyle trade is going to be great, and I'm going to be highly confident, given the liquidity, to be able to fade that, whether it's 50 cents or $1. But that first trade is always great, and so I want to stay focused on this thing. And if and when it comes, I will fade it. Then I'll move on. It's not something that I would swing, but I am a little upset that I completely fumbled that cold trade. Either way, monitoring, let it go. You guys know I like to watch it step up, step up, step up, step up, speed up, parabolic, and then I'm starting to get focused. So you can see that the candles, they're starting to get bigger. And so I want to take advantage of that if and when the trade comes. ONCS was a nice quiet unwinder trade on Friday. That was the idea. Again, it's nothing that is super, super exciting, but I just kind of let it work. The VWAP seller throughout the day, and unfortunately, it really flushed into the close, but I did not have any left. So I'd be watching pops, but I could see this, continually unwinding. The only thing to take into consideration: 60 million shares, 40 million shares, and then whatever it went to is just such a small amount. Let's see. Went to 3 million shares. So we went to like 5%. So that said, you want to be cautious. If it starts to swipe up and hold trend, you could have a liquidity trap. But this was all the same old: pull the offering, create the liquidity, and they probably refile, anytime. Cala, same deal, same situation as AI, where you had a lot of these swipes. You feel good about it, flushes down, holds trend, goes up, slams down. Guess what? It still holds trend. So what I look for is this: what are the common areas? And until it actually starts to stay heavy under these two channels, I mean, you've got all this trap right here, and you've got all this trap right here. It's got to blow out. They did have an S3, two of them after hours. One was for selling shareholders. One was to sell X amount of shares from time to time. So at some point, they're going to price it. At some point, they're either going to ATM it or price it or whatever. But that doesn't mean it's just a straight short. I think maybe a lot of people were anticipating that and maybe got stuck, but we'll see what happens. 550 is still the key level for me. And last couple, continuation side, these some I have long. I always tell you if I'm long them. And then some, I just like the charts. I'm monitoring them. Hopefully they continue to go higher, and I'd watch either for a blowout or some sort of backside move. If they have the wicks like we talked about, I would join. But otherwise, Wave WAVD, I am currently long. It had that nice ramp on Thursday, then slammed back down. And this is exactly why, when I had posted the idea as a potential big picture idea, there's no reason to chase these things. And if you look at Wave D, it ramped up over 1, came back down to 80 cents or so, 85 cents. But overall trend, you can see the buyer and tape for the last couple months anyway, or maybe a month. But overall, it's holding. So now it's starting to get faster. So again, if you're buying that breakout, your risk goes way up. If you missed it, you missed it. But just watch for dips, and that's exactly what I did. So I still have that position from that idea that I gave, and my average, I think, is around 90 cents or so. So we'll see. I'll let it work until it doesn't. Game, no position, but it's clear, nice ABCD type breakout on the daily. Dips, every dip getting absorbed. You can see the soak and the wicks that we talk about here. You can see the dip and save on Friday. Again, I look for those dips and saves, the dip and rip candles, because that's what promotes longevity. If there is no dips to shake people out, then everybody's going to have size. And then when it does pull back, it's just going to be destruction. And then last but not least, SQLT. You guys, this should look familiar. SLQT, rather. Should look familiar to you guys. I've been talking about it for a couple weeks now. Again, the reason why I was bullish, looking for that trend join, is because of the wicks, and each time it got absorbed after, it held oddly well after the couple days. I don't have a position on that. It's just been an idea, and again, kind of showcasing the dips and the wicks that I'm looking for to promote longevity. So, other than that, make sure you guys check out Scan. Check the physical, the click through to the blog anyway. Go to, CVNA, just stuff that I want to stay familiar with. FSLY, all these names have been going crazy, and I want to stay familiar with them. You even got NVAX, where just a death blow, gap down, comes back. Now let it blow out. We're going to have a fantastic dollar, maybe more fade at some point. Nothing to step in front of, but if and when it turns after this squeeze stops, it's going to be a great high edge, high reward, lower risk style trade. So that is it. Again, if you have any questions related to IU, oh, by the way, if you are in IU, make sure you guys are checking out the tools that we have now. When I was traveling and when I was here at the beach, it's just nice. I don't have all my software and everything here yet. I didn't set it back up, but Max has crushed it on the high day, low day list, and those the extra alerts for when they start to swipe. The tape burst way ahead of headlines. We have a couple other new features that we've been testing that you guys are going to love. And then again, the pre-market scanner, intraday scanner is literally a carbon copy of what I've been using for years. So we've got more coming, and every day we kind of have a new feature. So I know that a lot of people watching this video think that we're just a chat room, but that's not the case at all. We are a technology company with crazy scanners. It's been an amazing ride, and Max is absolutely crushing it with taking some of my ideas and then making them even better, and then he just comes up with his own ideas all the time and makes the room better as a whole. So and you guys saw some of the new features that we added with the scrape. So when a particular newsletter or a hit piece or a research piece comes out, you guys can see how that has been pushing through. So anyway, if you do have questions, reach out. You can hit up cam@investorsunderground.com, and that's it. Have a good rest of the weekend, and we'll see you in the room on Monday.